Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Miguel Perez-Santalla, Vice President of BullionVault, making a return appearance. Miguel, nice to have you.
Thank you.
Now, I want to talk about the situation in Ukraine, which I think is a very scary and dangerous situation. You know, it's in very much a state of flux, new information emerging, constantly. The markets were initially very unnerved by that. They kind of calmed down when it looked like Putin was backing off a little bit. But there's a real potential here for some, very scary developments. Have the markets now gotten a little bit too complacent?
I think that, well, first off, this morning's news, the Parliament of Crimea voted to join Russia, which to me, I'm like, how did they even have a parliament in Crimea? I thought it was like part of the Ukraine. So we over here are just learning about all these different issues going on. So they voted to become part of Russia. So how's Ukraine going to react about that? And at the same time, we don't know the situation with the Ukraine in terms of their security with Russia. Is Russia really going to just stand by? Or are they really planning to go in there? So people are concerned because we don't really know the politics. And from here, let's face it, you and I can talk, it's like talking about a family problem. You and I can talk about ourselves, but when we talk about someone else's family issues, we don't really understand all the nuances that go on there and what's going to happen. And I think that's why we see interest coming back into the gold market and gold starting to rally again. And we really don't have the answers. No one has the answers to what's going on. The only other issue is that Germany is very tied into Russia monetarily and economically and fossil
energy,
fuels,
dependence, etc. But it begs the question, or raises the question, in prior crises, you didn't see gold react that forcefully. What gets me, and I think I was on top of this recent gold rally that we've seen, but now I'm starting to see things like lots of hedge funds are bullish on gold. They've gotten the most bullish they've been in like 3 years or something like that. So the natural contrarian in me says, as soon as these guys, now they're first starting to figure it out. They didn't like it back in December. I think that's when you said it was a good buy back then. But now suddenly at 1,300, 1,350, approaching 1,400, they suddenly start liking it again. So, I mean, is the news baked in? I mean, is this as far as we're going to see in terms of this rally?
Well, I think starting in January, you saw funds starting to come back in because many people did see that it looked like it formed a strong bottom at the 1,200 level and was going to go higher. But then there was also a lot of the bad economic reports we were getting about the U.S. When they were expecting better, it came out worse, and every time it would say, hey, you know what, maybe I better buy some gold just in case we're not right about this. And tapering's already been discounted, right? So that we're not even going to talk about anymore. So what's going on? So we have that strong bottom being built on gold at 1,200. And then now we have the crisis of Ukraine, which is driving it higher and may still drive it even higher. But I agree with you, when the funds start piling in is actually when it becomes more dangerous for the gold price itself, because if they go to liquidate, then it creates a tremendous downward pressure and could drive it lower. But it looks right now like we have stability. We had, with the pop in the Ukraine, open interest had jumped up by 10,000 contracts. And then the next day's news, it remained the same even though the price drifted lower. So that means that there's some stability in the market and we may go higher.
So where is open interest historically right now? Is it high? Is it low? Do you know the breakdown in terms of commercials? Are they long, short? Non-commercials, are they long or short?
Well, the last time
I haven't looked recently.
Yeah, I had looked on Friday, and it looked like what they call the speculative longs had increased over the weekend.
Which is understandable given the rally.
Right.
Now, the other thing is that stock market's very, very strong, okay? New all-time highs in the Dow and the S&P. I mean, can gold continue to go up when you're having competition from equities?
Well, that's a good question. And the way I look at it is the stock market, right now the Eastern European problem does affect the stock market somewhat, but in a way the U.S. is isolated because we have so much, we're independent on fossil fuel now. So our businesses and everything will continue to grow no matter what the issue there. But how will that affect us is the other concern. I think that's why people will continue to diversify some money into gold just to hedge their bets and be protected in that way.
Isn't the best correlation for gold is against oil? In other words, if whatever direction oil's moving, isn't that the direction? I mean, historically, hasn't that been
I don't
the
know.
relationship?
I looked at a long-term chart recently, a 20-year chart, and there are times that they go in totally, completely direction. So there's no guarantee of anything. The one correlation that I did notice after studying the last few months is the GDP. When the GDP goes down, gold reacts and goes higher. That's, to me, that's a good sign, because that means it's functioning as the tool it should be. In other words, so when the GDP starts going up, yes, gold will go lower. But that's why one financial manager told me he doesn't care about the price of gold, really. He buys gold as a protection in their insurance and in their portfolio overall. And everything else they're hoping does well. It's when things aren't going well that gold makes its move.
Now, how long do you think before we see that, what was it, the 2011 high of 1,900 and change, if ever?
If ever. I mean, there's a lot of factors. I mean, we will, of course, at some point, but it's really that we're talking about increased money supply and growth, and then the value. Of course, that means that gasoline's going to be $8 a gallon, and the toll to come over from Jersey's $25.
Isn't it there already?
it's almost there.
It seems like.
But
I don't even look at my Easy Pass statement anymore.
I think it's $13, right?
Wow.
But how long will it be till it reaches 1,900? I'd give it years. But gold as part of your portfolio, I think, is a good idea.
Now, in terms of the physical side of the equation, I mean, what are we seeing in terms of supply, mine supply?
Oh, there's no lack of gold. We're getting plenty of mine supply. There's no threat to mine supply. China, as you know, is one of the world's largest producers and consumers of gold right now. And actually, China is the largest consumer of gold as of last year. They surpassed India when India put restrictions on imports.
Now, who's buying that? Is that the Chinese people? Is that official? Are those official purchases of gold?
No, actually, there's no way to break that down officially, but there's a lot of the people are buying gold, the mom and pops are buying gold, but also there's official buying. One speculation recently was that the central bank had been building up their coffers to strengthen up their currency because they want to, give the dollar a run for the money. But the Chinese central bank, the People's Central Bank of China, People's Bank of China, came out and said that they didn't really increase it. So we don't know, how much is truth, how much isn't, and we could just look at the numbers.
That actually didn't work out too well for Russia and Putin, who was buying gold a couple of years ago pretty aggressively, and he also had this idea of tanking the dollar, and he bought into this whole belief that the Fed's monetary operations were going to result in a dollar collapse or
but China's not that way. They're not thinking that way. China's thinking just to build their balance sheets and their strengths in all the different places to be competitive. They're looking at it as competing, not like this, big megalomaniac trying to take over the world. They're not looking at it that way. They just want to be competitive.
China not trying to take over the world. No. All right. So it sounds like what you're saying is that looking forward the next year or so, more of a trading range kind of environment.
That's correct.
And I guess if you're a long-term investor, whatever dips you could take advantage of, you should be, right?
That's correct.
All right, great. Well, we'll definitely check back with you again and see how that works out. But sounds good. Thanks a lot.
Thank you, Mike.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.